Hi everyone, it's Jim Wyant from Spark Network, and I've got a treat for you here today. I've got the two founders of iClima. You can find them at iClima.earth. They are Gabriella Herculano and Shaila Leekha. They have come up with an extremely interesting methodology to give pure play access to the decarbonization space. That's my shorthand, I think, of what you guys do. Would love to hear a little bit about how the two of you came together and why you've gotten into the decarbonization space. Whoever wants to tackle, Gaby.
Okay, I'll go first. Shaila and I, we worked together at GE Capital for many years, so we have a similar background in risk. So we're very good, I think, at understanding the macro events shaping up an investment opportunity. And we both went to Wharton. That's how we first met. I'm 2 years her senior. I'm class of 2002. She's class of 2004. And then she left to join Fitch. I left to move to Asia, where I was for about 5 years in Singapore. When I moved back, we reconnected. And we were both thinking of doing something, an entrepreneur and doing something together. And we looked very much into the space. The motivation was to do something that would be truly impactful and unique and relevant. And of course, we did leverage the background in renewable energy and our experience underwriting investments into the space. But immediately for us, it had to be beyond renewable energy, right? That's just one element of it. So we came across the findings of Project Drawdown, and we were very much impressed by their approach. Not only it's broad in that they look at all the 100 existing solutions that could bring the planet to that carbon neutrality, but they quantified. And for us, that was a wow moment, right? That quantification, right? You state your purpose and you show that metric and you quantify as a proxy for impact. So we very much wanted to bring this to market. We looked at the space of the investment products, and then two things that became very clear to us, right? That ETF was our what and the how, and our why was very much the decarbonization. ETF is a very well understood product, is tax efficient, is liquid, is inexpensive. That's a lot of the reasons why it's booming, and we wanted to be associated with that. And then we looked at the existing ETFs with that climate change focus, and there was a very clear void. So a very different approach. I think it's easy to find in the market space of the funds that look at the companies doing less harm, reducing scope 2 emissions, rightly so, right? But those are the low carbon, very broad, 1,500 constituents, or the very narrow one, 25 names, and it's very much clean energy focus. And we thought that was this big void that we really wanted to fill. And I think we did. We launched last year, London Stock Exchange listing on December 8th. We are growing AUM pretty fast. We had a very good year in 2020. We're up 83%. Last 2 weeks were challenging for us, but nonetheless, the long-term trend, I think, is crystal clear. So we're very excited about what we're doing.
That's great. Shaila, can you talk a little bit about sort of the big picture opportunity? Obviously, really a shifting dynamic in the US with the new administration, presumably more low carbon friendly. And really, from my perspective, from the investment perspective, the most interest and genuine excitement I think I've seen in the ESG space largely, but especially carbon ever. So could you talk about that a little bit and sort of how you see the path forward for iClima?
Sure, I'd be happy to. I think you're exactly right. It seems to be a really interesting moment, a tipping point. We've heard people say over and over, and it certainly feels that way to us. I know this last month of February in 2021 was the largest inflows of funds into ESG ETFs, about 19 billion. So the global market is now over 200 billion, and that's up from just under 100 billion at the beginning of last year. So it's great to see. And as Gaby mentioned, I was at Fitch where we were creating the ESG product for fixed income in 2019. And that's where I first saw this real interest in investors looking at ESG and climate more closely, asset owners, asset managers. And when we started looking at this space, Gaby and I, when we formed the company that year, there was this real sort of confusion. So we set about trying to figure out how can we bring a more analytical and quantitative approach to doing that. In the US right now, we see that there's a great momentum with the Biden administration. We see policies, for instance, I know President Biden had said that he wants to make the entire federal fleet of commercial vehicles electric, and was ready to award a contract for that, the USPS. So moves like that, we see more and more of those coming down the road. But not just the US, I think everyone is clear. The EU has certainly led the way. There's no doubt about that with the EU Green Deal. And China, equally, it has set a target of being net zero by 2060. And while that might seem later, the other countries, we are absolutely certain that their impact will be huge. They already have the largest installed capacity of renewable energy assets, so they're going to be catching up very quickly. So for iClima, it's really important. We do feel like there has been this tipping point, and when we feel well placed, because with this inflow of funds into the ESG space, as I mentioned earlier, there's also been this real diffusion and proliferation of products. And when we came into this space, what we saw again was that confusion about how certain ESG funds are defining themselves from climate-linked funds that have this broad 1,500 group of companies, sometimes very narrow, just renewable energy companies, and then a plethora of ESG funds with very questionable impact. And I saw that firsthand when we were creating that ESG product at Fixed Income. So because Gaby and I have very much that background that's steeped in analytical thinking and investment, we wanted to bring that to iClima. We wanted to sit down and think, well, how can we think about carbon and investment funds in a more analytical way? And that's why we spent the past year, it certainly wasn't easy, the past year before we created our first fund, really digging in to which companies are making that difference, starting from a big top-down approach of the sectors that will really decarbonize the planet, and then bottom up into the companies that are really making that difference. So there's impact there. But what we're really excited about is these companies are the ones that are going to be the winners in the future because they're offering the solutions. So it's such a win-win. And that quantification, it's really a proxy for us to see how these companies are going to benefit in the long run, because the greater their ability to avoid carbon emissions with their solutions, the greater the potential for their growth in the future. And it's as simple as that. So our first product looked across the spectrum. We have 158 companies across 28 subsectors, none of them more than 1.5% of the entire portfolio. So it's well diversified. It's a tiered approach. And all of those companies we think are well positioned to really offer the solutions where they're set for real growth. Our second product is looking at a very specific area. It's looking at distributed generation. We see this energy transition being a major shift coming down the road, and it could be 10 years or 15 years, but it's going to happen. And it's all about energy generation at the point of use. So the ecosystem that exists around that, it's the software that enables smart management of energy. It's the solutions that allow, for instance, electric vehicles generating energy to return that power to homes or to the grid, and a number of different items. So our second product is very focused on that innovation. And our third product, look out for that down the road, is very much focused on green hydrogen. And so with these three, we've quantified what their solutions could have in terms of impact, in terms of decarbonizing, but we've also put together what we think are the real winners in the shift to a low carbon future.
Yeah, it's a great answer. I was going to ask you, what's more important, returns or impact to you when you think about things? And you were sort of saying we can have both. What do you think is really, when you get down to the most important thing for you and for iClima, What is that? Is it performance or is it impact? Or do you have to choose? What's your thought on that?
I think we lead with innovation, right? I love how Kathy Wood always talks about that, right? Technology solves problems. We need to decarbonize, and how do we do that? The obvious answer is renewable energy, but it goes beyond, right? Green hydrogen, fuel cells, measurement instruments, vehicles to grid, taking that electric vehicle idea to the power and to its full extent. So electric vehicles will put a pressure on the grid. A house that attempts to decarbonize and not necessarily go off grid, but become almost self-sufficient, right? Will increase if you add one electric vehicle and heat pumps, right? So you're electrifying your transportation needs and your heating needs. Your consumption of energy will grow by as much as 40%, right? So electric vehicles are part of the solution, but they will stress the grid system, but they can again be part of the second layer solution, right? With the vehicles to grid, right? All that battery inside the cars. We're talking about 245 million cars inventory by 2030, right? It's 10 years. We're all going to be alive by then, right? And this is somewhat of a conservative forecast by the IEA. So it's technology that will solve the problem. It's technology solving decarbonization and translates into high revenue. Companies are growing very fast, and it's that bottom of the S-shaped curve that we're observing as of now, right? But that's how is expected that Tesla will get to 60 million cars, right, inventory by 2030. That's a very material number from the 500,000, right, that they sold last year. So with that comes returns, with that comes margin, comes market share, and then stock performance, right? So we lead with innovation. We expect the companies to perform well, and we think that it's they come together because they decarbonize, they problem solve, they gain market share, they sell fast, and it's a very positive sort of ecosystem getting built. So definitely the returns with the potential avoided emissions, that drives everything that we look at, right? Is that ability to allow the world to continue to move forward, but with a low carbon footprint.
And I guess for Shaila, what do you see as kind of the size of the opportunity for iClima? Like, where do you see iClima being in 5 years?
What I would love to see is that we have put together a suite of products like the ones that we've already created, finding more innovations, finding more opportunities to really ring-fence those companies making a real impact, and eventually growing. So we've started out here in Europe. We're launching our products in the US this summer, and we're going to look beyond that by the end of 2022 and 2023. We have certain partnerships in place already to provide the data behind our indices to certain players in Asia, in Australia. So we hope to be in 5 years, I would say, a truly global company with a really well thought out suite of indices, of products, investment vehicles for investors that are making, that provide opportunities to make that kind of investment in companies that are innovating and providing the future of how the world is going to live and be able to decarbonize. And just to touch quickly on the point you mentioned before, so that question of impact is very close to my heart. So the majority of my career has been spent in investment, project finance and infrastructure and energy, but I've also done that within the multilateral space. And I've also worked in public service here in the UK. And so this question of impact is absolutely still very close to our heart, but we don't want to confuse that. We want to make that impact. We want the companies in our portfolio to be the real champions. So we do have screens in place that negatively screen, which we don't have to, certain aspects of decarbonizing potential. So we believe, to your earlier question, that you don't have to compromise on one to make the other. And that's the beauty of the model. If you are truly the champions that are going to provide those opportunities to decarbonize the world, you will be the winners, because there's no doubt that the world is transitioning very quickly into this low carbon future.
That's great. Thanks so much, both of you, Gaby and Shaila. Really enjoyed the time and appreciate your time.
Thank you, Jim,
Jim,
for the opportunity.
Please visit sparknetwork.com for your complimentary registration.